You'll find the link to blockchain explained in infographic in the description and pinned in comments below. Most people lose money in crypto for one reason, and almost nobody realizes it until it's too late. It's not bad luck, it's not a scam, it's something built into Bitcoin itself, something called scarcity and halving. And once you understand how they actually move the market, you will never see crypto the same way again. In the next 30 minutes, you will discover why Bitcoin is designed to become rarer over time and why that matters more than you think. The exact moment when Bitcoin supply gets cut in half and what almost always happens to the price afterward. The dangerous mistake 90% of beginners make when they hear the word halving, and the real reason crypto can explode or crash based on something as simple as supply and demand. By the end, you will know how to deal with crypto without guessing, panicking, or getting burned. But first, I need to show you something most crypto gurus will never tell you. If you want simple crypto education without the confusing jargon, hype, and fear mongering, subscribe now. We post videos every week that help beginners avoid expensive mistakes and understand the real mechanics behind crypto price moves. This channel is your shortcut to stopping the guesswork. Imagine you walk into a room and there's only one gold bar, but 1000 people want it. What happens to the price? It goes up fast. That's scarcity. And it's the invisible hand that's been moving markets for centuries. In economics, scarcity means there's limited supply but potentially unlimited demand. Gold is scarce. Real estate in prime locations is scarce. And Bitcoin is designed to be scarce. There will be there will only ever be 21 million Bitcoin, not 22 million, not 30 million, 21 million. Period. That limit is hard coded into Bitcoin's rules. No government can print more. No bank can inflate the supply. That's why many people call Bitcoin digital gold. Think of Bitcoin like a digital island with only 21 million pieces of land. Once all the land is owned, no new land can ever be created. If more people want to move to that land, the price of land goes up. This is why scarcity matters for you as an investor. Because when something is truly scarce and more people discover it, the price can move in ways that change lives. But there's a twist. Bitcoin doesn't just stay at a fixed supply from day one. Something happens regularly that makes it even scarcer. And that something is called the halving. And this is where it gets dangerous for beginners who don't understand what's coming. Every roughly 4 years, something happens in the Bitcoin network that no other asset in world has. The amount of new Bitcoin created gets cut in half overnight. It's called the halving, and it's one of the most powerful forces in crypto and also one of the most misunderstood. When Bitcoin first started, miners were rewarded with 50 Bitcoin for every block they mined. Then the first halving happened, 50 to 25. Second halving, 25 to 12 and a half. Third halving, 12 and a half to 6.25. And the most recent halving in 2024, 6.25 to 3.125 Bitcoin per block. This will keep happening until we reach the year 2140, when all 21 million Bitcoin will have been created. So every 4 years, the new supply of Bitcoin is cut in half, but demand demand doesn't automatically cut in half. In fact, more often the opposite happens. Imagine a store that sells 100 loaves of bread a day. Then suddenly the bakery only makes 50 loaves, but the same number of people still want bread. What happens? Some people will pay more to secure a loaf. That's exactly what happens with Bitcoin after a halving. This is why many traders watch the halving like a hawk, because historically, after each halving, Bitcoin has gone on to massive rallies, not immediately, not guaranteed, but over the following months and years. The pattern is hard to ignore. After the 2012 halving, Bitcoin rose more than 10 times in the following year. After 2016, again multiple fold gains. After 2020, Bitcoin went from around $10,000 to nearly $69,000. But here's the dangerous part. Most beginners hear halving and think, okay, price will go up soon, I'll buy now. And that's exactly when they get hurt, because the market doesn't move the way they expect, and the risks behind the scenes are huge. In the next section, I'll show you what actually happens to the market before, during, and after a halving, and the mistake that wipes out beginners. Before every halving, the market starts to whipsaw. Prices shoot up, then crash, then shoot up again. People get excited, then they get scared, then they fear of missing out in, and then they get crushed. Why? Because the halving is priced in and the market is full of traps. Smart money, big investors, institutions, experienced traders, they don't wait for the halving to happen. They start buying months or even years before. They know the history. They know the supply shock is coming. So by the time the halving actually happens, a lot of the upside has already been priced in. Then when the news hits and beginners rush in, those smart investors often sell into the hype. That's when the price can drop sharply. After the halving, something interesting tends to happen. The market stabilizes. Supply is now thinner. Demand keeps growing. And over time, the price often starts climbing again, sometimes massively. Think of the halving like a movie. The trailer comes out months in advance. People get excited, tickets sell early. By the time the movie actually starts, the biggest rush is already over. The real story unfolds after the opening night. That's how the halving market cycle often plays out. This is why so many beginners lose money. They buy at the peak of hype, right around the halving. Then the price drops. They panic. They sell at a loss. And then months later, the price starts climbing again. Without them, the halving is not a magic button that makes price go up overnight. It's a long-term supply shock that plays out over months and years. And if you don't understand that, you are playing with fire. But here's something almost nobody notices. There's a deeper risk that's even more dangerous than timing the halving wrong. Something that can wipe you out even if you are right about the halving. In the next section, I'll reveal the real risks in crypto that beginners underestimate and how to protect yourself. You can be right about scarcity. You can be right about the halving. You can even buy at the perfect time and still lose everything. How? Because crypto has risks that have nothing to do with price. Let's talk about the big ones. Exchange risk. You don't hold your own coins, they are on an exchange. That exchange gets hacked and goes bankrupt, and your coins can disappear overnight. Remember FTX. Millions of people thought their money was safe. It wasn't. Seems scams and rug pulls. New tokens, fake projects, influencers, shelling coins, people pour money in and the developers pull the liquidity and vanish. Gone, mistakes. You send Bitcoin to the wrong address. You lose your private key, you get phished. There's no customer support calling you back. No reversing the transaction. Volatility. Even if you are right long term, the price can drop 50% to 70%, even 80% in a bear market. Can you handle that emotionally? Many people can't. They sell at the bottom. This is why crypto can be extremely dangerous for beginners who jump in without a plan. You are not just betting on price, you are betting on security, knowledge, and psychology. And if you ignore any of these, you are one mistake away from losing everything. The biggest risk isn't the market, it's you, your emotions, your lack of knowledge, your trust in the wrong places. But here's the good news. Once you understand how to manage these risks, crypto becomes much safer. You can stop living in fear, you can stop guessing, you can build a strategy that lets you deal with crypto confidently. In the next section, I'll show you the exact framework beginners should use to invest in crypto without burning out. Imagine you are about to cross a dark bridge. You don't know what's on the other side, but you have a flashlight, a map, and a plan. That's exactly what you need in crypto. No plan. You are walking blind. Here's a simple 5-step framework you can use starting today. Start small. Only invest money you can afford to lose. Seriously, if losing it would ruin your month, don't put it in crypto. Learn the basics first. Understand what you are buying. Bitcoin, Ethereum, a random meme coin, each has different risks. Don't buy what you can't explain in one sentence. Use trusted platforms. Stick to well-known exchanges and wallets. Learn how to use hardware wallets if you are holding long-term. Never share your private keys. Never click suspicious links. Think long-term. Don't try to time every move. Don't chase pumps. Treat crypto like a long-term bet, not a casino. Diversify. Don't put everything into one coin. Don't put everything into crypto. Keep the majority of your savings in safer assets. Crypto should be a part of your portfolio, not your entire life. This framework won't make you rich overnight, but it will protect you from the most expensive mistakes. And over time, that's what protects you and lets you stay in the game long enough to win. But there's one more thing that most beginners miss. Something that can turn a good strategy into a great one. It's about how you balance your crypto bets with the rest of your investing. And if you get this wrong, even the best framework can fail. That's exactly what we cover in the next video. and it could save you from one of the biggest beginner mistakes in crypto. But first, let's hit the final payoff, the biggest insight about scarcity, halving, and market impact that changes everything. Here's the hidden secret almost nobody talks about. Scarcity alone doesn't move the market, it's scarcity plus belief. Bitcoin could be scarce, but if nobody believes in it, the price stays near zero. The real power comes when most people start believing that this scarce asset has value. That's why every halving is also a psychological event. It's a reminder this is getting rarer. Most people are noticing. Maybe I should pay attention. That's the real engine behind crypto rallies. Supply shock plus growing belief. And if you understand that, you'll stop chasing every hype cycle and start thinking like someone who understands the game. Here's the biggest insight of this entire video. Crypto isn't just about charts, coins, or hype. It's about scarcity, trust, and time. Scarcity gives crypto its unique supply dynamics. Halving is the built-in event that makes Bitcoin rarer over time. Market impact comes from how people react to that scarcity with fear, greed, hope, or belief. If you understand this, you stop reacting emotionally. You stop panicking every time the price moves. You stop chasing every next big coin. Instead, you start making calm, informed decisions. You invest with a plan. You protect yourself from the biggest risks. And over time, that's what separates people who win in crypto from people who lose everything. You don't need to be a genius. You don't need to be early. You just need to understand the rules of the game and play them wisely. If this video helped you understand scarcity, halving, and the real risks in crypto, and you want to stay ahead without wasting years, learning the hard way, subscribe now. Every week we break down complex crypto topics into simple beginner friendly lessons so you can invest with confidence without fear. This is the channel for people who want clarity without clarity and not hype. But before you invest in any coin, watch this next video here. In it, we teach diversification and balanced investing, how to mix crypto with the rest of your portfolio so that you don't bet your future on one coin. This one video could save you from one of the biggest beginner mistakes in crypto. Click it now, and I'll see you there.